What are some of the challenges, let's start there, that homeowners that are wanting to create income on their property have faced over the last, let's just say, 5 years?
Sure. I mean, I think a big one, and I've seen this on your podcast already, is the insurance woes, being able to maintain insurance.
And so, when people talk about renting versus owning, I think what they have to realize is if your rent goes up at 9% per year, in 9 years, you're going to pay double what you're paying in rent today.
I mean, it's relative.
You're such a wealth of knowledge. You're not someone who's just reading data. You're in the data every day. How many years now?
My gosh, let's see. I think I started in 2005, so
Yep.
a few.
A few years. So you're an investor and you also manage a ton of doors. How many doors are you managing these days?
This morning it was 1,063.
1,063. Okay,
Yeah.
cool. I'd like to hear about it. So what is the advice that you're going to give a landlord that comes to you with rentals in this situation?
Two things.
Hey, this is the Money Hole Podcast. I'm Chris Lamb. Today I'm so excited because my guest, Aaron Robertson, is not only a good friend, a phenomenal scuba diver, but he is one of the biggest property managers on the West Coast. Just a wealth of information, one of the nicest guys you'll ever meet. And this podcast, we're going to dive into investment properties. We're going to talk about some of the trends that we're seeing, not only here in California, but nationwide, because he talks to people all over the nation. He's been featured on many national podcasts for investors, and you're going to love this one. So please make sure to like, subscribe, download, or leave a comment or question. We want to know what you think. And with that, without further ado, Aaron Robertson, what's up, brother?
Man, thanks for having me. I appreciate being here. What an opportunity.
Well, I've been trying to get you for a while. You're a busy guy. Every time I reach out to you, you're diving in the water somewhere.
And I don't want to complain about that because it's pretty cool, but I've been very blessed to travel over the last 12 months quite a bit.
Yeah.
And gotten an opportunity to scuba dive in 6 different locations. So it's been very, very cool.
I respect that so much because your kids are older now, right?
They are. Yeah. I have just one at home. It's actually working out really good for me. I have a dog, right? So I can't just leave whenever I want, except for he's there for me and helps with that. So yeah. So I have 4 grown children.
Yep.
Several of them that work for me. And then I have 7 grandkids. So,
that's awesome, man.
Yeah.
Living your best life. Well, I love that. I think we work hard to enjoy our life. And, being a cancer survivor, 2009, I love to work hard, man. I work so hard, but I also love to play, because that whole idea of work hard for 20 years so that you can enjoy your life. Like it's hard to really think that way when you've knocked on the door of death a few times for me. So when I see your pictures, I'm always very happy for you. And
thank you.
I'm sure you have some people who go, oh, he should be working on getting my rents up. I see swimming so much, but I'm happy for you.
Thank you. Thank you. I truly appreciate it. It's been,
well, listen, man, the reason I wanted to have you on the podcast is because you're such a wealth of knowledge. You're not someone who's just reading data. You're in the data every day. Right. And I mean, at this point, tell me, let's go back and tell me how you got into property management and kind of what your story was that got you where you're at today.
Sure. I'm glad to. So a couple of things. I used to be a restaurant entrepreneur and used to be involved in running restaurants. Lots of folks here locally know me from running the Olive Garden. I did that for 7 years. And although I really enjoyed the restaurant business, one of the big challenges of that is you typically have to work every single weekend and every single holiday. And unfortunately, that means most of your family doesn't see you when they're available, right? I mean, when your kids are out of school, you're working. When the holidays are there, you're working. So I really wanted to do something different. It's interesting. I actually took all the classes to be an appraiser. I really wanted to be an appraiser. I thought that would be just fantastic. And in the spirit of doing my research, I overlooked one fact. And back when this came about, you had to work 1,500 hours under another appraiser and get you to sign them off. Or get them to sign
Which
you
is
off.
a long time, yeah.
Yeah. It works out to be something like, 42 hours a week for a year or something. So yes, that's the overlooked part. Literally, I started calling around after I completed all my classes and making calls. And boy, I got some awesome responses, some of them extraordinarily unpleasant.
Oh, yeah.
And one gentleman did say, hey, I'd be glad to train you. You will do it all for free and you won't miss a shift or I won't sign you off. Well, at the Olive Garden, I was pushing between 50 and sometimes 70 hours. So the idea that you wouldn't miss an appraisal in your training period was not a thing.
Mm-hmm.
So I had to pivot because I really wanted to dial my schedule back a little bit and get an opportunity to be around when my family was. And
and let's pause there for a second, because you brought up a good point, this appraisal. I was just talking to a buyer recently, and she said, "How much is my appraisal?" I said, $750. And this is a buyer who hasn't bought a house for 15 years, back when they were $350.
Sure.
And so she asked some question. I said, well, here's kind of what's going on in the appraisal world. I said, there isn't a lot of them anymore. I said, they have a monopoly. I said, in order for more appraisers to come in and create competition, they have to get signed off by a current appraiser for almost a year. And most of them won't do it. They don't have the time to do it, to be fair.
Sure.
And, they are kind of training their own assassin. And so the appraisal industry right now is in a very interesting place. On one hand, you have only a few quality appraisers in many markets in America. But on another hand, they're starting to get scared because you have a lot of chatter about AI and data, where, the future is looking more and more like the physical appraiser, or physical anybody for that matter, for almost anything, is starting to look like technology is going to replace it. And I don't think there's a reason to be scared. I think if anything, it's going to make people's jobs easier that embrace it. But, the appraisal world it's still that way, just so you know. So anyways.
So I had to pivot very quickly because I still wasn't achieving my goal, and I decided to get into real estate. And some family that I had a property management company, small, very small. And so I ended up joining that and ultimately bought into half of it and ran the gamut of that. But we built that to be one of the largest property management companies here in Shasta County. And I just really enjoy being able to control my schedule, because I'm like you, I work a ton. I mean, most people sometimes think I'm a little nuts probably, or I have ADD. But on Saturday and Sunday, I want to work on what I want to, right? Which usually my favorite part is, I don't want to tour empty properties. I want to go meet the property owners. I want to talk about real estate. I want to talk about property management. So I pivoted from the restaurant business and got into property management, and been here ever since.
Yeah.
So.
How many years now?
My gosh, let's see. I think I started in 2005, so a few.
A few years. And you're also an investor. You own properties.
Yes, sir.
I mean, that's one of the best things about your role, is you learned a lot about passive income.
Sure did.
Passive income is the key to happiness in life. I mean, it definitely isn't everything, but it makes things a whole lot better. And
sure.
And so you're an investor, and you also manage a ton of doors. How many doors are you managing these days?
This morning it was 1,063.
1,063. Okay, cool. Well, let's talk a little bit about the rental market. So we're in Redding, California, but you talk to people all over the nation, and you also know markets all over. And I've been looking in, I don't know, I'm doing loans right now in Kansas, Arkansas. I just talked to a guy in Mississippi yesterday, and the rental market in California has taken some hits, and I think it's important to talk about that. As a property owner in California, in Redding, I will say it's very tempting at times to sell everything in exchange into a better state that has more friendly property laws, better cash flow, less regulation, affordable insurance, affordable electricity. I could go on and on. But I believe in Redding, and I still care. And there's part of me that feels like I'd be a sellout if I did that. What are some of the challenges? Let's start there, that homeowners that are wanting to create income on their property have faced over the last, let's just say, 5 years.
Sure. I mean, I think a big one, and I've seen this on your podcast already, is the insurance woes, being able to maintain insurance, especially if you happen to be outside the city limits. It's real tough.
Right.
So that's a big challenge, and it doesn't look like there's a fix on the horizon for that any minute, right? I mean, it's going to be long and drawn out.
It could get worse for a while.
And I think you're absolutely right. Yeah. As I talk to people in other markets, though, I'm seeing other markets that have that same challenge, though. I mean, I have a property owner that's just moving 5 residential properties from Florida, and he's getting them all sold, and he's going to come here and buy some multifamilies and a 12-plex that we're helping him with. It's a similar issue, right? He bought there, got good pricing, things were great, but now he's faced with these high insurance things, and he's having some vacancy issues because some folks really are trying to do their best as they retire or move to try to get into a safer area. which is crazy for us, right? Because we had the fires here, we've had hail, we've had snow, we've had a lot of crazy things.
There was even a tornado a few years ago.
Right. Yeah. So we've had all these challenges, right? But, I think a lot of people are trying to recognize that they can't be in an area where you have to run fast. And hurricanes and tornadoes can really make that happen.
They can.
Yep. I know fire's dangerous, but at the same time, I feel like for the most part, we get a pretty heavy warning and an opportunity to react to get to safety.
Yep.
So I think it's a little different for us, but we're seeing some challenges there. And a lot of owners, that we talk to want to move properties. I mean, the value in the properties from one state to another. And in this case, so the example I gave you, they're actually moving it backwards from Florida out. I think one of the things that's interesting when I look at the picture as a whole is that no matter where you're at, in California specifically, there's no one building hardly anything. Yeah. So the supply problem is going to be an infinite problem as I see it. Interest rates aren't going to help that. Inflation isn't going to help that. So the rent prices are just going to keep ticking up as where some of the areas that, owners may be considering moving their properties to, where it's a lot more flexible for you and your tenants and it's a lot more flexible for builders, will probably cure the supply issues quicker than we will, which means their rents will probably have to become very competitive and they'll start fighting over tenants.
Yep.
I mean, I remember 9, 10, and 11 here in Shasta County. It was like, hey, rent our 2-bedroom apartment, get a month free and get a free 42-inch TV and 2 buckets of Kentucky Fried Chicken and a gift card. I mean, it was pretty crazy to find tenants. So I think for the long haul, we're not going to see that in California.
No.
There's vacancy rates are low. I mean, currently when I looked at it this morning across our portfolio, we're at 5.7 this morning. I mean, we're real low.
Yep.
So.
Yeah. Yeah. So for people listening, we're talking about the challenges of owning investment properties in California. And one of the big ones that you mentioned there is insurance. And the reason why that's a big deal is because if you own a property and you have let's say your debt service or your monthly mortgage is $1,000 a month, and you just got a notice from your insurance company that they are canceling you, and you find what insurance is available, and now your payment with insurance is $1,200 a month, and you've been renting that property for $1,400 a month, you just lost 50% of your cash flow. Agreed. Which for someone that has one vacancy in a year, there goes all your profit, right? And so that's one of the challenges we're seeing, but it's only one of them, and so when we talk about the reason why people are moving out of properties and one of the challenges of people renting properties or raising their rent to try to compensate for some of these expenses that are on the rise, what's the problem there that we're facing in California?
I think a few things. One thing I want to put in there is, due to the complexity of managing the rentals, is taking many owners' ability away to manage it on their own or keep themselves out of harm's way. So I think that's making it tough for the small investors.
Yeah, I hired you as soon as I went to small claims court for the first time.
I'm sorry to hear that was the reason, but I'm glad it got us connected in business. So I appreciate that. But that makes it very tough for the starter investor, right? Because if you're going to buy it and it's barely going to cash flow, but you can get your sweat equity in it by managing it yourself, maybe doing your own repairs, that's somewhat going away on half of that. Harder to control your cash flow. It's a super bummer. Big portfolio owners typically don't want to mess with their properties, and I can't blame them because you're trading your money for your time, and we can't buy more time. You mentioned that in the beginning of the conversation, how important time really is, right? So I think that's one challenge. The second challenge is, our median income here in Shasta County specifically, and in a lot of areas in California, is not raising fast enough to allow landlords to increase their rents fast enough to make up for their expenses. I was actually joking with Julie, my wife, who's a real estate broker at Authority as well. And we were joking because we were just recently diving in Mexico. And, you go into a store and you buy something and it's like 7,000 pesos. Right? I wonder how long, or if I'll see it in my lifetime, where we go to buy something and it's $7,000, but minimum wage is $15,000. We just keep adding all these zeros on the back of everything. It's very creative a way to do it. But yeah, there's some definite challenges.
Yeah, there really is. I think that one of the things that is, so for someone buying rental properties right now, it's very hard to pencil. You have to get really creative. And I think that insurance is a problem. Recently, Pacific Gas and Electric has raised, in the last 3 years, they've gone up 200%. And so if you're a landlord and you have a tenant that is on a fixed income renting your property, and all of a sudden, instead of spending $200 a month for electricity, you're spending $400, that's putting the pinch on them. And, that could increase the chance of vacancies but here's the thing, you touched on it. We have a supply and demand problem. So, a few years back, Governor Newsom signed the bill that created rent control, which means that, correct me if I'm wrong, a landlord can only raise rents 5% plus CPI per year.
If they're bound to rent control, that's absolutely true. You're speaking to AB 1482.
Yeah.
Yeah. And say there are some owners that are exempt from that, which gives them a slight bit of an advantage, but it's still yet again just another legislative control making it tougher on the landlord, right? And empowering tenants to push back on their landlords quite a bit.
Yeah, it really is, which is why property management is so much more important right now, because you're going to help people navigate that, get qualified tenants. Because I mean, the most important thing to renting properties is going to be tenant selection, right?
I would agree. You can head off incredibly large amounts of problems down the road by getting the right tenant.
I mean, I did a video last year and I talked about this. I mean, when I used to rent my properties out, I mean, I would pay attention to everything.
Sure.
Do they show up on time? What does their car look like? How do they talk to me on the phone?
Sure.
I mean, I'm trying to pick up on every little detail because I do not want to deal, because I've had some really bad experiences, man. I mean,
agreed.
And it's unfortunate because it's a small community and there are people I know and run into at church and the grocery store and various places, and you just assume everyone's going to be a great tenant because they seem like a great person. And all of a sudden you kind of have them on the inside and you're like, whoa, this is very awkward. Right. So, but one of the things that, this rent control did is the people that had good tenants that never raised their rents have kind of put them at a disadvantage because they could only raise their rents so much. And, as a landlord, I will tell you, I don't want to raise my rents. Like, I want affordability and I want to see things harmonious and I want to see a free market. But one of the problems that we've had is because of government regulation and how they've created stimulus and done a lot of the things that have put us in this position, it's difficult for the investor to buy properties. It's also difficult for the renter to rent properties. And one of the questions I haven't asked you for a while is, what are we seeing right now as the average rent increase per year in this area? Like, what are you seeing in the last 5 years? What's been kind of the average rents have gone up?
Sure. And it's different for every owner, especially depending on how far behind they've gotten caught by the rent control.
Sure.
Right? If they're plenty behind, then they're being really aggressive because they really don't have a choice. But I would tell you, they're also not feeling good about it either.
Yep.
Right. I mean, we get into conversations where the owner's vacillating back and forth, and you can tell they have emotional tension in it. Right. They're not trying to jam up the tenant, but they're also not trying to write a $300 to $500 check for their rental each month. I'd say on average, you're probably looking at 7%, I would say. It's probably pretty reasonable across the board. On the high end, a lot of owners who are exempt from rent control are having to push it a little farther than that, but it's usually because they've had a good tenant and they haven't been raising their rent. And by the time it's time to start moving, it's in a way too late. And this affects other things. I mean, it affects saleability of a property too, right? I mean, I just was looking over a rental listing earlier in the week. An investor was red hot to buy it. It was explained to him that the rents are low. But one other part of AB 1482 is that you can only do that 5% plus CPI in a 12-month period. And so, the rent numbers he's looking at have just been moved. So he's like, oh, no problem. I can get back in, and with an ownership change, I can do another 8.3%. Well, you can. It's in a 12-month period. That doesn't change between ownership. So in his mind, as he's looking at this listing and reading it, and unfortunately, I don't think the listing agent knew it, but it's looking like there's room to move up the rents, but legally there isn't for 11 and a half months. So yet again, another challenge created by that legislation. And then, and I'm not sure if you've probably seen it in your owner's statement, but then we have a nice blurb about what comes on July 1. We have another nice piece of legislation coming out on July 1 that talks to the fact is that landlords who own more than 2 properties or more than 4 units in total now can only charge 1 month's deposit under any circumstance.
That's all I charge anyways.
Well, maybe. I mean, maybe sometimes when you're willing to take a pet or something like that, we might get a pet deposit too, but now you can't do that.
Yep.
Or if you own furnished rentals, you used to be able to take 3 times the rent.
So what is your advice going to be to a landlord? Because I want to play this out. Because here's the reason why. Every single time that our government seems to come out with some sort of a legislative piece of whatever you want to call it, that is seemingly to be pro the average, the low to moderate income, it ends up doing the exact opposite of that.
It really does.
And I did not read my statement, so I'd like to hear about it. So what is the advice that you're going to give a landlord that comes to you with rentals in this situation?
Two things. With the entire situation in whole, I think you already nailed it. It's really important to find the right tenant. And I think it's really important to manage your rental like a business, right? Take some of the emotion out of it. Look at your profit and loss regularly. Make sure you're keeping your rents in accordance with what they should be. Because as we talked about earlier, when you get caught behind, you're behind.
Mm-hmm.
That's a problem. That's a problem when with your ownership. That's a problem if you want to sell it. So I'd be a firm advocate of keeping your rents, just at market, regularly increasing them when you can. Tenants get in the habit of understanding rent increases if you do them regularly. We think it's kind of despicable if you don't raise their rent for 5 years and then you say, hey, I'm looking to get another $400 a month, because that changes a lot of people's lives, right? Yeah. Which is unfortunate. I wish that wasn't that way. I wish everybody $400 didn't really make a difference, but that's really not where the case or where the universe we live in. So I think maintaining it and being on top of your rentals. Second thing is I think keep them in really awesome shape, right? I mean, you can either pay for your expenses now or you can pay for them later. But if you pay for them later, they're going to be more expensive and then they're going to become more relevant. We get some landlords that maybe keep the rentals a little rough and they don't necessarily attract the best tenants for that.
Mm-hmm.
If your rental's rough, you're going to maybe get a rough tenant.
Yeah.
So keep them in great shape.
I don't want to own anything I wouldn't live in myself. That's been my rule.
That's awesome.
So when this bill in July, here's what I see. If I'm a landlord, I'm not taking pets anymore. I'm probably not going to take the risk of pets. If I can't get more of a deposit, I'm probably going to take less. I'm going to cut back and have a higher bar for the quality of the tenant. So for me, this is just another example. This is going to hurt renters because landlords are going to find a way to. Capitalism will always find its way.
Agreed.
We've worked around every single thing, and it's sad to me that so many of these things end up hurting the person that it's supposedly supposed to help. That's what's such a bummer about this. So, you said 7% a year.
Yes, sir.
I heard the average in California is about 9%. And so, when people talk about renting versus owning, I think what they have to realize is if your rent goes up at 9% per year, in 9 years, you're going to pay double what you're paying in rent today. True. And people think that's crazy when we say it, because what's the average rent today in Shasta County?
If you're talking single family homes, we're probably right at about $1,700 a month.
So $1,700. So you're looking at $3,200 in 9 years for rent. Now that sounds crazy to you and I, but 9 years ago, what did that house rent for?
Oh gosh, we were probably in the 1100s or 12s.
Exactly.
It's relative.
Yep, it is. It's all relative because of inflation. So, that's one of the reasons why buyers right now who are educated and understanding like what's going on in our, the financial markets, the inflation, what's going on with the Federal Reserve, they're willing to take a temporary sacrifice on a higher payment with rates where they're at versus renting if they can, because they understand that, hey, this doesn't look like it's going to get better. We should probably do something sooner than later.
Well, and I would just add to that. I feel a lot more comfortable when I'm buying real estate than putting it into the stock market with where we're headed. So, I think there's definitely
depends on how you invest in the stock market. Real estate guys always say that.
Well, the only reason I say that is because I don't know. I own quite a bit of Tesla stock, and depending on how Elon's tweets come out, it's depending on how my stock's doing. So I like that.
True.
That real estate is a little more governed, because I don't like it when Elon says something maybe he didn't mean to say or he shouldn't have said, and then I'm like, oh, cool, we're from 229 down to 170 in an afternoon. That's super fancy. So
yeah,
that's one of the reasons I like investing in real estate.
I like real estate too. I think diversification is important.
Agreed.
I think if you're doing stocks, you got to do dollar cost average. You got to be diversified in your stocks. Like buying a Tesla stock's a great stock to have, but it's one stock, and most people should be in the S&P 500, which is average 10% for, since 1940s. And then if they want to buy a few stocks that are good companies like Tesla or Apple or Amazon or NVIDIA, NVIDIA was at $135 a year and a half ago, and it broke $11.50 this week, because it's kind of the chip for AI. And I had a lot of friends that did really well there. So I think the stock market is incredibly valuable. I really try to teach people to do both. You know, it's like
Agreed.
if you've got a 401k where you can drop your taxable income with your employer, you should max it out and figure out where you can put it and have in the right places. You should buy primary residence and should buy rental property at some point in the next 10 years. And so, but let's talk about buying rental property. So,
Sure.
but their investment. So let's go back about 3 years. 3 to 5 years ago, before the pandemic, there was a ton of money coming in to real estate from non-owner occupant buyers.
Agreed.
And the numbers just made sense. We had low rates, we had lower prices, and we still had a very high demand in rents, right? Today, it's a very small percentage of the buyers. And the reason why is very simple. We got high prices, we got high rates, and we got rent control, and we got all these other, it's very difficult to buy a property today and actually make money. To your point with tornadoes, I just bought a property in Bentonville, Arkansas about a month ago, and the tornado hit it last week.
Awesome.
Yeah.
Awesome.
So that's a real problem, and I don't know when it's going to get rented, and hopefully my insurance cover it. We're right in the middle of it now, but it's not easy to do. And so, but it is possible.
Sure.
And I'll tell you where I see people winning in buying non-owner occupant real estate. And it really just goes back to the fundamentals pre-pandemic, pre-Airbnb, pre all these different creative things is you're finding a property that's outdated,
Right.
that's beat up in a nice area, and you're putting sweat equity into it, and you're trying to bring it up to a much better quality. You don't have to necessarily go crazy with it, but it's somewhere that's got good carpet, good paint, smells good when you walk in. It's safe for a family. It's near a park. It's in a good school district. You got it at a little bit of a discounted price. And even then, you may not cash flow right away, but if you look at the rate of rent increases over time, you will probably end up doing pretty well. Speak to like where you're seeing opportunities right now.
Well, and I would agree with what you said. I think that's a great way to get into it, right?
Mm-hmm.
I mean, Joanne and I've done several flips in recent times, and, that's a great way to make sure that you can cash flow.
And when you say flips, you mean buy it, fix it up, and rent it out. You don't mean flip it and sell it.
We actually do both. Sometimes we'll buy it, fix it, and sell it if the timing is right?
Mm-hmm.
And the profit for what we're up to in our master plan, so to speak. But definitely, I mean, in the last 3 years, we had two of them that we held on to, because the appreciation factor was so great. Hanging on to it for 1 year made a heck of a difference.
Mm-hmm.
So definitely willing to do both, but that's a great way to buy properties versus just buying one that just had a Section 1 and Section 2 inspection 100% completed, all the work done. There's nothing to do there. It's really hard to cash.
You have a lot more competition with
Right.
a property like that. Yeah.
Mostly impossible. But what I'm seeing a lot of owners are getting into right now that haven't in the past as far as opportunities is multifamily.
Mm-hmm.
And the reason that I believe that that's going to be a great thing for a lot of people is because when you look at the rents, if you have the rents tick up 10%, as you said, but you have 10 units, it's a lot faster to overcome the cash flow deficiency.
Mm-hmm.
So I think that's a great opportunity. Lots of duplexes and things come a lot closer to cash flowing. And then usually, most often you split the vacancy in half, right?
Mm-hmm.
And it's very rare. And if you're controlling it, to have both leases come up at the same time. So it is nice to always have a load of money coming in all the time instead of, on single family, when it goes empty, you're just writing checks. Right?
Yep.
So definitely seeing some opportunity there. And then I'm a firm believer that, you talked about dollar cost, averaging, right? I mean, you can skip it. You can not buy any real estate for the next few years and really wait for the ultimate crash. But I saw a lot of people try to do that, and a lot of investors miss it.
Mm-hmm.
9, 10, 11. I saw a lot of investors buy as much as they could and bite off way more than they could chew and lost several of them later.
Mm-hmm.
So I think buying regularly and often as you can is probably the very best way to go.
Yep.
And I think of it like this too, if I'm looking at a piece of property, even if it's a couple $100 a month upside down, let's say 200 for an example, I can either put that $200 in my IRA or I can put that $200 into a piece of real estate, write that $2,400 a check a year, right? You do that for 10 years. I'm quite confident that same amount of money, your financial investor's probably not going to turn that into 100 or 200 grand worth of equity, right?
Yep.
And there's no tax deductions that come with putting that money.
Yeah, exactly.
So we've been coaching a lot of our investors that because of the timing, the high prices and high rates, doesn't mean it's not a good buy, because if you're only looking at today, that's a challenge. But if you're looking 5 years down the road, as you said, and rents have come up 5 times and you smooth out, right? Smooth out some of your expenses over time, then you're going to probably be really super happy that you bought it, right?
Yep.
But if you're just looking at your rent versus what the payment is going out or what you have to cover, that's not always amazing. Yeah,
because you have things like depreciation and cost segregation, and extreme tax deductions when you own investment property that a lot of people, they're not aware of when they're starting to think about it. But man, that's such a great point, because if you buy a $400,000 house as an investment property and you put, let's just say 80 grand down, and you have to pay $200-300 a month to hold that property, you know, for you to take 80 to 100 grand, and let's just say that property over a 7 to 10 year period goes up at 5% a year, which is very conservative for California.
Sure.
You know, you're looking at, I mean, gosh, man, that's probably 800-900% return on your investment, because you only put up 80 to 100 grand. And if that $400,000 house is worth, 800,000 in 10 years, you took 80 to 100 and turned it into $400,000 in equity, because you took control over a $400,000 asset.
Right.
And you got tax write-offs. And at some point along the way, you were not paying $200 a month, because as you mentioned, rents are going up. So it really has to be a long-term approach. And I see that as the biggest challenge with people that are thinking about real estate today, is they're still approaching it with the lens of 2020.
Yes.
Even real estate agents, a lot of agents right now are really struggling, and it's a tough market. I mean, make no mistake, it's a very challenging market right now, but some of them got in around the pandemic. And so they don't actually know what it's like to be in a difficult market where you really have to educate and help a buyer make a really intelligent decision.
Sure.
Lenders as well. And I think that everything has to come into play right now. Electricity costs, insurance costs, long-term versus short-term. You have to look at your tax write-offs. And I think when someone looks at those things today, certainly if they're buying a house to live in, most of the time, if they can, they should.
Well, and I would agree with that. I mean, because, your average person who buys a home takes out a 30-year note, right?
Yep.
I mean, so we're not looking at this today. We're looking at the long haul over 30.
Mm-hmm.
So, I mean, I definitely think they should. And it's kind of interesting. I look at something a little differently than maybe some people do. If the house is perfect for myself and my family,
mm-hmm.
the memories I'm going to create there, the days I'm going to enjoy there are incredibly important to me, especially because typically, and I think we're very similar this way, if I'm home, I'm working.
Mm-hmm.
If I'm away playing, I'm playing. So I spend a lot of time at my house, right? I mean, typically, if you call me on the weekend, you'll figure out I'm at home.
Mm-hmm.
I'm not running all over. So my house needs to be amazing for me. I mean, it's where I spend an incredibly large amount of time, and I want to feel comfortable and enjoy it. And if it cost me a few $100s more because, when I went to buy it, interest rates were bad, I would have gladly paid it.
Mm-hmm.
Because it's important that space that I spend all my time in is my space. That's what I need. Kind of like it's interesting. I was having a conversation with a friend of mine, and they were looking at these different beds, and one's like $3,000, and the other one's like $1,500, and he's having kind of a little dilemma on which one he should buy. And that seems like a lot of money for a bed, but like you spend like a third of your life in it. I mean, I don't know if you want to be cheap on that, because that's a third of your life.
I bought a Sleep Number last year, man.
Right?
It is incredible. I mean, that thing cools off at night. It heats up in the winter. I can read in it, because I could hardly ever read laying flat. And so I fall asleep every time. So now we can, I mean, it's amazing. I mean, it's some of the best money I ever spent. It wasn't cheap, but yeah, I agree with you. I think long-term thinking is really important right now. But the last thing we'll talk about is we're talking about the people that can.
Sure.
And the challenge with what's going on with housing right now is it is truly pushing the low to moderate income out of being able to afford housing. And so I don't know if you're seeing it. I'm sure you are, but I'm seeing multiple families buying houses together right now and moving in together.
Sure.
Like I'm seeing people getting creative, and the only solution that I see with the government right now when it comes to regulation is they're making it easier for, high density housing.
Right.
Affordable housing, which you share the same wall, and I mean, I guess it's better than living in a cardboard box or something like that. We're seeing ADUs and things like this. And I really think that when it comes to California specifically, owning a single family property, like a 3-2 with a yard, like it's becoming a scarce asset. And it almost reminds me of Bitcoin. It's like, there's only so much of that. Sure doesn't look like you're going to make any more of it. And I just truly believe, if we look at some of the other countries and kind of how we're following suit, that people that own real estate, they've always done well. And it sure seems like the current environment is ensuring that they will continue to do well in the future.
100%. I mean, there's no doubt in my mind about that.
Mm-hmm.
I mean, I think about 6, 7, and 8 as everything was ramping up. And you'll probably remember this. I mean, around here you had contractors and they were building their own 7 houses to push up for sale, right? If it wasn't a situation where somebody's like, I'd like to build a house, you find a contractor. You found the contractor and you said, hey, I'm right in the middle of building these 7 houses. Which one would you like, if any, right? And you're not seeing that they can play because it's too difficult for them to build between the cost versus, what it costs to bring it to market. So that's a challenge. Going to keep supply, real low again. And it's making it hard for anybody that's trying to do developments, right? I mean, you're seeing a couple of the big players coming into, say, Shasta County doing them, but a lot of the little ones have evaporated.
They
right?
have. Yep.
So I think we're going to have a supply issue probably for the rest of my lifetime in California because California doesn't play nice. But that being said, if you're a real estate investor and you bought in and you can afford to hold the long term, you're going to do crazy. It's going to be amazing. And anytime things get tougher, that's where opportunities are born, right?
Yeah. I think the next year is going to be one of the greatest years for opportunity. I mean, it's happening right now. I talk to people all the time and I'm seeing some really cool opportunities. And yeah, man. Well, Aaron, I appreciate you coming on. And for those of you watching or listening, feel free to drop a comment, a question. We'd love to see if you're an investor, you're thinking about it, ask questions. Let us know what you're seeing. If you're currently buying a property, we would love to hear from you. Again, please make sure to like, subscribe, or comment. And Aaron, I appreciate you being here, buddy.
Thanks for having me. It's nice to spend time with you.